Welcome to the Week in Italian Startup, where we discuss the latest highlights happening in the Italian tech and investment ecosystem. Welcome, Nick.
Ciao, Jack. Buongiorno. Yes, the market is currently restarting slowly, so
Yes.
there are things going on. Announcements are coming back, so interesting week.
Awesome. So let's start. Let's highlight the two biggest deals of last week, I would say. So Netfintech, a fintech startup, raising 1.7 million euro from We Holding, and one of our favorite, Banca Valsabbina.
Yep. This is let me call it a traditional fintech startup. They operate in the finding credit lines and the right type of debit or supporting finance product for your company. So nothing particularly fancy, I would say, other than Banca Valsabbina is one of the investors, and we've seen them quite a lot. So they're taking positions in several fintech startups, either investing or acquiring minority stakes. Not a bad round, 1.7 million. So it's the usual big-ish seed or smallish Series A round. We've seen quite a bit of them. So
I agree.
The biggest of the deal.
We've seen really Banca Valsabbina in the past year, like moving extremely fast. What I found particularly interesting is that if we go and check their website, actually there is not much publicity in terms of what they're doing. So even if we go and try to check what's going on, it's very tough to kind of, they're not promoting their kind of activity, but underneath they're really trying to get into the right place so that they probably can integrate services, like we always say, and different products. So it's a super interesting move.
Yep.
Yeah.
Not in the newsroom. Have you taken a look? Did you take a look to the newsroom?
I was more looking for like a specific page where they say, hey, we're like innovating by investing in different companies, participation and so on. But yeah, probably also
so there is no
not too much
inbound actions in terms of being visible.
Yeah, it's very corporate in a way. Also, the newsroom is a lot about like quarterly result. Yeah, some mention of some like the investments that they are doing, but really it's still like kind of low key, I would say.
Yep. So no inbound actions. So they're doing very specific outbound actions to find the targets. Yeah. Interesting. Yeah. Good observation, Jack. Interesting.
Yeah, it's interesting. So yeah, great strategy. We'd love to talk about this with some of the people from there. We need to reach out and see what's going on.
Or if they're listening to this, please feel free to reach out.
Yeah, no, totally. Awesome. So that's an interesting. Actually, it's talking about Change Capital, which is basically the brand that Netfintech is using to commercialize. As you say, it's something that we've seen before, but it's very like functional for I would say this special historical moment when there is like a very scarcity of banks kind of supporting companies to give like a liquidity for development like business development in general. So this is definitely like riding a very, very strong need of the whole economy, I would say. So that's interesting. All right, let's also talk about moving on. Let's talk about Impossbl, which it's a very curious deal, I would say. So they define themselves a next gen production company. They are, I think, LA based, but most of the team is Italian. Managed to raise 1.13 million US dollars in pre-seed by different business angels, and then Exor, which I don't think is Exor seed in particular. It's probably like the holding company, So looks like is from a different starting point. But let's go step by step. Let's start by understanding exactly what's going on with these guys, which are extremely, kind of upfront in what they're trying to do, and with a lot of components, I would say.
Yeah, actually, it's probably not easy to just quickly understand what they are doing, but for sure, this is they're envisioning some new type of approach to content production for the metaverse. So we're talking about all the new layers of visual content, objects, things that will populate the metaverse in a sense, and they're going after this new market that's opening. So I know them. We've been meeting them in the last couple of years, and of course they've been evolving quite fast, because the same concept of metaverse is a bit of a moving target right now. So difficult to grasp, at least for myself. I'm not getting it at all. But let's say this is what they're doing, or my understanding what they're doing. I don't know whether you want to add anything.
Yeah, I like the fact that they're trying to take the problem of content creation, and in particular quality content creation for the metaverse, in a very systematic way, and actually providing tools for writers. So on different perspectives. So it's a production company, which means they're supporting writers to write and promote their story. They give them tools. They're talking about originals, how they're gonna basically be a fully blown production company like Netflix or Amazon styles, where they do original content which is pushed by them. And on top of that, look at this, Nick, it's Impossbl Ventures. So it's coming soon. So basically it's probably a way to actually accelerate and push particular particular selected creatives to actually promote stories and grow followers, and do something with the stories in general. So they're really tackling the problems from a series of different angles. That's very interesting.
Yeah, even though that's basically what the production studio does, right? So it scouts for stories and produces them. So
that's true.
Is it venture capital? I don't know.
It's a good point. It's a great point.
I don't know what anything is anything anymore. So I have no ideas. Well, if you think about it, I mean, before venture capital, there was Hollywood. There were producers who invested into stories and brought the stories on the big screens. So, I mean, yes, totally. That's it. But with new means over new platforms, over new technologies, that's for sure something new.
I think the use of AI also is something that can be interesting. So scouting stories in different elements. So they're claiming that there is AI that they're gonna deploy in order to find stories that are particularly interesting, commercially speaking, or for whatever their needs are. And that can be a great way to have an investment angle. I mean, it's I'm thinking, maybe we're thinking too much like VC firm. Where's the investment thesis? How it's gonna work? Do they need that? I don't know. Maybe not. Maybe they need a tool, and then they need to go through the different steps that the production of content has been in the past years. Maybe that's interesting.
I don't know. It's something new, something very new in terms of 20 years ago you had just a few television channels with the main content produced in the world, channeled through these 20 television channels, and the content was just that. There was a certain number of things produced.
Yeah.
Netflix changed it in a sense. Maybe TikTok is gonna change it again in a sense.
Fine.
The metaverse Web3 is changing all of this again in terms of quantity, of quality, of ways of consuming. So maybe there is something interesting here that we'll only witness in 5 years from now, because today is still too liquid, too fluid to actually grasp. So I got no idea, but still.
Yeah.
I don't know anything anymore.
It's a complicated episode today. It's very complicated.
Yeah.
So another really cool element is that they're taking this as a story as a service model. So they're kind of putting as a service into the game, and the way that they're gonna create and produce stories is AI, human, or hybrid written stories for both Web 2 and Web 3 projects and brands. So they're gonna allow AI to actually support the content creation part, and we've seen this like happening. I mean, visually, we've seen one of the news that you were mentioning, how exactly this AI is basically becoming an artist. I forgot the name of the tool that we mentioned a few episodes ago.
DALL-E.
Exactly, DALL-E. Yeah.
Yeah.
So
there are more. There is a lot of stuff happening in that space right now, including an open source version of something similar to DALL-E. So, I mean, it's chaos right now.
And think about this in storytelling and writing stories, narratives, and everything. That's really changing forever the creative process of writing, and like fiction or non-fiction. Well, fiction maybe starting.
Well, yeah, in a sense, if you think about it, GPT-3, you give GPT-3 a topic or an incipit, and it will complete the reasoning, apparently at least. So not just complete the sentence, but complete the reasoning. So AI is better than a human writer because explain, and it will tell you the pros and cons of why AI is better to a human writer for certain types of storytelling. I'm not surprised that the natural continuation of it is, I give you a dragon, a princess, and a knight. Tell me a story about it.
Interesting.
I'm not surprised.
Yeah. Fantastic.
Do you remember when everybody thought that, boring, repetitive jobs would be the ones that would be eliminated by AI?
Yeah.
Think again.
Yeah. Think again. Exactly. So now even creativity is at risk. These AIs are just taking over. Yeah, I mean, at the end of the day, that's okay. We're going to end up like batteries. Like, you remember the Matrix. We're just batteries, and that's it. As simple as that.
Probably even worse, consumers.
Yeah, maybe. Awesome. All right, let's talk about Exor and its investment in an Indian EV startup. It's Ultraviolette Automotive, basically manufacturing vehicles, two-wheeled vehicles like motorcycle in India. And Exor is participating. And I would say that, from an investor standpoint, that's probably the highlight of last week in terms of volume. It was a huge investment. And Exor has been definitely on the edge of being basically the protagonist of many shifts, and that's another investment that confirms the thesis. So Exor seats aside, even the holding is definitely in the forefront, and that confirms. So
yep. Yeah, I have to say that this is not the first investment they make it in India. They invested at least another time and probably a couple of times in recent times. One was a portal aggregating repairments and maintenance services for the automotive, so perfectly in line with what they're doing and the history of the group. And again, here in Ultraviolette. And as we are talking about Exor, I was checking the Exor Seats website. They have Impossbl in the portfolio, so the investor in Impossbl is actually Exor Seats. So
interesting. Okay, interesting. Interesting. Very interesting.
And probably the second or the third investment they make in a foreign company, US-based company, run by Italians, funded by Italians. There's a trend here.
Yeah. Awesome. Very interesting. That's another, another episode that we should craft about just talking about Exor and Exor strategy. That's definitely something worth worth a full thought about that.
Well, we should really invite them.
Yeah, no, exactly. That can be like something super interesting. All right, talking about maybe some interesting. That's the news that actually you mentioned, and that definitely caught my attention. The fact that Oltre Venture is exited a position in Centro Medico Santagostino, which is basically I would say like a chain of hospital locations, and yeah, I don't know exactly what's the performance of the investment, if they made money or not, but that's definitely it can be, I would say, interpreted as a good news, because Oltre has been investing in very specific verticals related to impact. Is one of the first fund in Italy actually doing impact investing as the primary subject of their investment thesis. So yeah, I mean, I hope it's a good news for them. So that's good.
Yeah, actually, really, from the article, I don't know much about the story of Oltre or Centro Medico Santagostino, but what you know, and from the article, Oltre was basically one of the founding partners of Centro Medico back in 2009, I believe. Mm-hmm. So, and they invested heavily since the first fund they raised into the project. And from the article, it appears that they continued investing with all of their subsequent funds. So for sure, they had a very important financial interest into the success of the Centro Medico Santagostino. As you say, I have to point out that it was one of the first, probably the first medical clinic heavily using technology to automate and simplify processes and things. So one of the differences with traditional hospitals or clinics, where operating margins were a bit different because of a streamlined process and proximity to the patient. So they at least they talk a lot about this diversity, efficiency, and so on and so forth. So an interesting story for sure. In the newsletter, I said sold, even though actually the article says exited the position. So I don't know what actually that means, because there are no numbers cited in the article. Probably Oltre has been divesting for quite a while the position, because Centro Medico has been growing, is now quite a big reality. So I don't know about numbers, but I would say that starting from scratch, probably it was a good call at the very beginning.
Awesome. All right, let's shift the attention then to some more academic elements. So let's talk about the report from Battery, which I thought it was extremely interesting. So for the listener, Battery is one of the biggest, probably investment firm in the US. They have different offices between the US and Europe. They've been working with a lot of SaaS companies. Is one of the big SaaS investor existing today, I would say. I think they're investing out of Fund 14. So their story is more than 30 years of operation, and just saying that they're Fund 14, it's something incredible to me. It's
mind-blowing,
truly mind-blowing. The team is pretty big, and they have a very clear strategy. Also, they support their companies with very specific services, which are catered for the growth of the portfolio companies. So that's a nice model. It's a very nice, successful model. I'm sure it explains why they've been operating so long. So that's cool. One element that you point out is the report that they issued, essentially, which is the Founders Almanac Q2 2022. And they basically introduce a new metric, essentially, which is an old but new metric, I would say. So they call it the APE, which is an acronym for annual recurring revenue per employee. So it's essentially you take your ARR, then you divide it by the number of employees. And according to them, that's really one of the most effective way to measure two incredibly important factors of a company, especially in the SaaS industry, which is growth, efficiency, and profitability. So that's a very, very key metrics that they're trying to, in a way, bring back. I've heard people in the corporate world like just saying, okay, take the revenue divided by the employees. That's significant in some ways or another. So depending on the interpretation, this is the SaaS application of that. And I like how they push them like a little bit forward, even coming up with the break-even APE, which is the total expenses per employee. So it's the reverse of the medal, which I thought it was a nice touch. And on top of that, I think there are a few considerations to be made in terms of what historically we have seen across different phases of SaaS startup in terms of that metric. I thought there was really cool data. So we're talking about companies like Zoom, Asana, GitLab, Twilio, Dropbox, and the like, and how exactly, depending on the maturity of the company, the APE changes, and there are interesting elements to that. But Nick, I want to know what you think about that first.
Well, you said it all, absolutely. And I agree with you. I mean, probably everybody has been using revenues per employee since forever, I believe. And I don't know whether many actually thought about ARR per employee. That's, as you said, a nice touch with respect to SaaS companies, where ARR is a much more important metric than pure revenue in a sense. I want to add the quarterly report goes quite a bit beyond just introducing the metric and making this highlight introduction to how it compares in different buckets of companies, but they go deeper into actually analyzing the current public market for cloud companies and how they are positioned. Also with respect to the APE metric, and that's a very interesting analysis, I would say.
Yeah.
The 4 quadrants analysis that they make is not just related to the APE metric, but also to the rule of 40. I think it's quite interesting.
That's good. Let's check it out. Yeah, that's good.
There you are.
Interesting.
I think this is yep. Because they compare growth, the APE metric, the rule of 40. There's the rule of 40 as a compass in a sense. So very, very interesting way of analyzing the public market. I enjoyed it, at least.
Yeah.
And then you also have a second. Oh, please.
No, I'm for the people that don't know what the rule of 40 is, and to be honest, I'm not deeply familiar with it. I understand it, but I never really used it in the field. So that's basically it's a rule that is being used for SaaS, for evaluation of SaaS company. And then Nick, please correct me if I'm wrong. And basically they add essentially the combined growth rate and the profit margin, and basically the sum of these two elements should exceed 40% in order for a SaaS company to be on the right track. It's kind of it's a sum benchmark. So either you have a high growth rate and small profit margin, or vice versa, in any combination of that. At the end of the day, if it exceeds 40%, that's a good sign. That's a good sign. I don't know if you wanna even sharpen this definition. That's cool.
No, that's perfect. Then that's actually it. So it's a rule of thumb metric to understand the health of a software startup. It was probably even born before the concept of SaaS was actually born. So we're talking about software startups. And from a certain point in the startup life cycle going forward, this rule tends to apply. So if you are below 40, then there's something wrong in the model. If you are above 40, then you're doing quite well. So it has been, one of those rule of thumb rules that tend to become basically leading ways to analyze the market. So that's an interesting one.
Very cool. Yeah, and for the
I'm trying to remember who invented it. It was a partner of one of the main VC funds in the States. Let me check.
Interesting. And as you check it, I really encourage people to dig deeper into the quarterly report. Talking about the rule of 40, the two elements that have been used there to calculate is basically revenue growth rate when it comes to actually company growth. So it's in terms of revenue in particular. And when it comes to profit margin, they use a free cash flow percentage of revenue. So it's a free cash flow analysis at the end of the day also. So that's particularly interesting.
Okay, the rule was popularized, it's not invented, but made popular by Brad Feld and Fred Wilson. Not exactly,
of course.
Well-known players in the American VC market.
Exactly.
And yes, so the basically it says that if you are a venture-backed SaaS company, venture-backed, so you have capital to invest, your annual revenue growth rate plus your operating profit should equal 40%.
Interesting.
That's the rule.
Yeah.
And it dates back only to 2015. So I thought it was older than that, but it feels older than that. It's just 7 years old in terms of being popular.
Yeah. Interesting. All right. Perfect. Nick, I don't know if you have any extra comment. I thought we covered some of the main highlights.
Well, if you feel like it's the Battery Ventures one presentation is not enough, there's a blog post about different metrics for public software companies regarding cost of goods sold, R&D, G&A costs, and sales and marketing costs, with all comparison with all of them. How they stack together.
SaaS spend ratios by
the SaaS spend ratios.
Okay, the one you mentioned in your newsletter. Perfect.
Yes, exactly.
Awesome. Fantastic.
If you can't get enough of it,
exactly.
That's another for you.
Awesome. All right, Nick, thank you very much for joining, and I'll see you next week for the next session.
Thank you, Jack. See you in a week.